Hello, Erwin here. I wanted to share a property that my client just recently purchased, a young gentleman from Montreal. So he's never actually seen this property in person. So here we go. This is a turnkey property in Kansas City, Missouri. What I like about this is this property is already tenanted. So that it's already tenanted, it's already renovated. You can see it's a fair sized bungalow. I think it's about 1,100 square feet or so, 3 bedroom, 1 bathroom, already renovated. You see the pictures of the inside. You can see even there's a box of the new flooring still on the floor. Again, it's turnkey, already renovated, move-in ready, right? Nothing crazy. Actually, those are pretty nice appliances. Nicer than most of the stuff I have in my own properties. And then classic USA, large lot. And this property is a whopping $175,000. Again, 3 bedroom, one bathroom, built in 1953, already renovated. Some highlights quickly, the cap rate's about 6.2%. For those in the business or accounting world, you'd call that gross profit margin, right? And then the rent is, again, the tenant already lives there. So it is about $1,400, right? And some highlights of the area as well. And I have some of my own information as well. So for example, this is Kansas City. The property is located in Raytown here, right? And then the Ford assembly plant is just up here in Kansas City. So they manufacture the Ford F-150. So there's two plants in the States that assemble the Ford F-150, which is the US's #1 selling pickup truck the last 46 years. They employ over 9,000 people. My point is more around there's probably job security for this plant because again, Ford F-150 probably not going anywhere. And the upside is lovely here. There in this area here, just outside the city, is where the Panasonic plant is being built. So this is the Del Zotto plant construction. So they're expected to be open like soon, spring 2025, and to bring 4,000 jobs to the region. And this is Panasonic, and if you know Panasonic, I drive a Tesla. So as far as I know, every Tesla I believe that was manufactured in America has a Panasonic battery in it via their joint venture partnership between Panasonic and Tesla that's been going for I think close to a decade. For example, the battery plant, the Gigafactory in Nevada is a partnership between Tesla and Panasonic. So again, anyways, back to the property. Overall neighborhood score B plus, so that's pretty decent. Again, this property is only $175,000, right? For less than the cost of a garden suite, you can have a whole house. And then the way we run our financials here at Share, you see we do 1 year, 2 year, 3 year, 5 year, 10 year, right? Notice the rents go up over time because there's no rent control. We account for vacancy and collection loss, right? And then I always encourage all investors to factor these things in, including collection loss. Now, for the Ontario investor, for example, to ensure bad debt or non-payment of rent, like that's 4%. It's 4% to pay to buy insurance, so I think it's reasonable to use 4% in your analysis in Ontario for bad debt. Anyways, housing insurance, leasing fees. So even though the property is already rented out, we still factor in leasing fees. Just in case the tenant leaves. Property management, it's only $1,000, just over $1,000 on a rent. That's $1,400. Also to note, the way we negotiated our deals with our institutional property managers, institutional grade property managers, is there is no rent. If there's no rent, there is no property management fee. Real estate taxes. These would be property tax, repairs and maintenance. Again, this property is already renovated. And the tenant already lives there, but we still account for. This is how conservative underwriting is done. You still account for these for things that could happen, right? And that's how we come to a cap rate of 6.2, right? And then just for an example, let's use a down payment of 30%. My assumption is going to be so most of my clients, about 9 of my 10 clients that are buying in the States are Canadians with no U.S. credit. So I'm going to use the going interest rate is around 7.25. So at 7.25, Again, you can always do more down payment if you want it to be to make sure you're cash flow positive, right? Again, these are annual numbers at today's interest rate. Again, assuming you have no U.S. credit. So again, I like being conservative, and this translates into just breaking even between the first 2 years. But again, very conservative underwriting. We have hundreds and a couple $1,000s in costs that you may not have, or you may have, right? Almost $2,000 in costs each year that you may not have, right? And then as a long-term investor, and because that's what we all are, well, if you're investing in these properties, you should be a long-term investor. Now, keep in mind that we are at historically high interest rates, and also I'm using a case where I'm assuming the client investor does not have US credit history. So once you do have credit history, which takes about 18 months to 2 years to build, then the interest rate will come down, and also interest rates again are historically high. And our projection is, because again, it's a projection, nothing's ever guaranteed in life, but if you follow what the Americans are doing, interest rates are expected to fall, and it's not just me, that's what the market predicts. So again, our assumption is 4% is what our clients will be able to get for refinancing in come year 3. And then notice the cash flow gets quite significant, much more interesting, right? And then depending on if you're a cash flow investor or if you're looking to scale your portfolio, you can take some money out or just leave it all in and collect cash flow, $3,000 a year. And then also again, notice how the cash flow goes up through time because there is no rent control. And also if you bought correctly, you bought in an economically sound area where prices go up, and that's what you'd expect. And again, these are forecasts, nothing's guaranteed in life. But again, based on the scenario with this much cash flow, for the investor that wants to scale, you can take some money back, right? I've taken back almost all my money, and I'm still positive under conservative underwriting, and I can in theory go buy another property, right? Some other things to highlight. Again, I'll include a link to this property in the notes. But what we like about the area, you see the population is growing. As of 2016, the population has been continuing to grow, right? You see household incomes have been continuing to grow, and you'd expect this to keep going up, especially with the opening of that Panasonic plant, because those jobs will likely pay close to $50,000 per person. That's American dollars too. And so keep in mind, like that 50,000 American for one person average salary would be higher than the average Canadian household makes, right? Unemployment's falling. And again, you'd expect this to fall even further with the opening of that Panasonic plant with 4,000 jobs expected. And just look what the housing prices have done for the last 10 years. It's all just gone up, from 80,000. So this is average prices for this zip code. So for this American equivalent of postal code, property prices have gone up from 81,000 to 200 and almost 5,000. So more than double in 10 years. So again, very happy for my client to buy this property. And again, this is turnkey. Tenant already lives there. Client doesn't have to lift a finger. Everything's done for them via full asset management. So if you have any questions on this, just let me know. If you know me, I'd love to help people get ahead in life via my favorite asset class, which is real estate. All right. So any questions, let me know. Don't be a stranger.